Is the global economy healing or heading for a cliff? Right now, the data is pointing in two opposite directions. Hi everyone and welcome to the September Economic Outlook. I'm George Economou, PhD economist, and in this video I will present the economic projections for the month and how they will affect you. Also, stick to the end for two big announcements. So, on one hand, consumer spending is finally cooling off, which should offer some relief. On the other hand, global inflation is lingering like a bad cold. This has economists and central banks divided. Should they cut interest rates to boost the slowing economy or hold them high to fight rising prices? So let's break down these mixed signals and what they mean for your money. This isn't a theoretical debate. The next call on interest rates will directly impact your mortgage, grocery bill, job security, and retirement savings. Understanding what's happening now is crucial for preparing for what's next. First, the slowdown signal. After months of strong spending, consumers are finally tightening their belts. In the US, economic growth continues, but the pace has clearly slowed, with 2025 projections showing more modest GDP growth. The Eurozone is facing weak growth with one modest recovery in the horizon. On the surface, this is what central banks wanted. Raising interest rates was meant to pump the brakes on the economy and relieve price pressures. So a dip in spending suggests the strategy is working. But that's only half the picture here. This is where it gets complicated. Despite the spending decline, inflation isn't dropping fast enough. The global trend is downward, but it remains stubbornly high. In the US, for example, the Fed's preferred inflation metric is still above its 2% target. With real concern, it could stay there. This isn't from a single issue, but a mix of factors: global tariffs, persistent supply chain headaches, and sticky services inflation. So even though we are spending less, many prices just aren't coming down. This brings us to the core dilemma for policymakers. They are caught between a rock and a hard place. The slowing economy and cooling job market suggest it's time to cut interest rates to avoid a recession, but persistent inflation argues for keeping rates high to win the fight. This is why you're hearing so many conflicting predictions. Markets are betting on a rate cut, possibly as early as this September, but it's still a toss-up. The consensus points to one or two Fed cuts in 2025, but the exact timing is the multi-billion-dollar question. So where does this lead? The global economy could follow one of three potential paths. First, the soft landing scenario, the ideal scenario. Central banks bring inflation down to 2% without a major crash, and growth continues at a sustainable pace. Second, a recession. This happens if interest rates stay too high for too long, choking off growth and triggering job losses. And third, stagflation, the worst case scenario of both worlds. The economy stalls, but high inflation remains, hitting finances from both sides. And so what does this mean for you and your personal finances? For borrowers, the Fed's next move is critical. If rates are cut, interest rates on new mortgages, car loans, and credit cards should trend downward. Until then, high borrowing costs are the reality. For the job market, a slowing economy means cooler hiring. While unemployment is currently low, job security is becoming a bigger concern. And for your investments, this uncertainty creates volatility. A soft landing would likely boost the stock market, while a recession would hurt it. Understanding these outcomes helps you prepare your portfolio. If you're getting value from this breakdown, hit that like button. It really helps the channel and tells YouTube you want more content like this. And now, time for the promised announcements. Starting from today, September 1st, I am releasing a newsletter. Here you will find key economic news, market insights, amazing stories, and updates. It will be sent to you daily before the US market opens, plus on weekends. It is and will always be 100% free, with no secret tiers and stuff. Second update, I will host a workshop on creating amazing portfolios. The full announcement is said to be done in tomorrow's video, but you will find hints in my newsletter. And as I value your contribution to this channel's growth, there is also a giveaway. 3 of you will attend my workshop 100% free. In order to win this chance, you must subscribe to the newsletter. I will host the draw and announce the winners in the October Economic Outlook. So overall, the September 2025 global economy is a puzzle. Cooling demand is fighting a battle against stubborn inflation, creating a major headache for central banks. The path forward is anything but clear. Whether we get a soft landing, a recession, or stagflation depends on the delicate balancing act happening right now. By understanding these conflicting signals, you're better positioned to read the headlines and prepare for what's next. So, which scenario do you think is most likely to happen? Let me know in the comments below, and don't forget to subscribe for more economic breakdowns. See you all tomorrow with a video on diversification plus the promised announcement. Bye bye.